Hello and good afternoon, this is Holly live from Kalkine Studio and you're watching The Market Movers. Well, while fear over the highly contagious Delta variant of the virus is becoming a global worry and denting investor sentiment, uptick in sectoral trends such as telecom, materials and consumer staples are pulling the strings of the ASX 200 today. On that note, let's zoom our lens on over to the market performance on the latest day of the month. Australian shares climbed above 0.8% on Wednesday, tracking a strong overnight finish in Wall Street. The S&P 500 and Nasdaq registered record closing highs overnight, lifted by Apple Incorporated and other technology stocks after an upbeat consumer confidence report. Looking at the sectoral front, telecom is the leading sector on the board today, with shares of Telstra rising up to 5%, their highest since mid-February of last year. After the country's biggest telecom firm said it would sell a 49% stake in its mobile tower and return half the sale proceeds to shareholders at the completion of the transaction in the first quarter of the 2022 financial year. The Australian miners sub-index was also charged up, as miners like Chalice Mining and Fluke Resources are the leading gainers on the board. Then global miner Rio Tinto shares rose more than 2% to hit a 3-week high. This is despite Rio having declared a force majeure on customer contracts at its Richards Bay Minerals project in South Africa, citing an escalation in the security situation at the operations. Other heavyweight miners like BHP Group and Fortescue are also trading in green. In addition, the heavyweight financial index rose, with National Australia Bank and Westpac Banking Corp adding to the gains. And on to the next sector, the charged up tech space seems to have returned into vogue in the global markets amid virus woes. Gains in the frontline tech stocks propelled Nasdaq Composite and the S&P 500 to new highs on Tuesday. And broader gains in the tech sector is evident from the spike in share prices of ASX listed stocks like Nearmap, Altium and Technology One. Although the Macquarie-backed Nuix was the top loser on the benchmark after the software company disclosed it was likely under ASIC investigation. And now let's look at the yellow metal space. Gold stocks hit a nearly 3-month trough on bullion weakness ahead of US jobs data later this week that could reinforce the Fed's hawkish stance. Sector heavyweight Newcrest Mining fell as much as 2%, while Ramelius Resources and Northern Star Resources also edged lower. Well, if we have to talk about the overall scenario, with around half of the Australian population currently on lockdown amid a resurgence of virus cases, the stay-at-home trend is back in the market, painting a bullish picture for tech darlings. It is worth remembering that the tech stocks largely escaped the fallout from the pandemic despite a rocky year for the rest of the market in 2020. Digitalization and e-commerce played a pivotal role in the sector's uptick. The fresh lockdown in parts of Australia is shaping up to a similar scenario for tech players, increasing the likelihood of behavioral shifts to a digital-first world. And now it is time for a short break, but stay tuned, I'll be back in just a moment.
Hi, this is Andy Liu broadcasting from Kalkine Media Studio in Australia, and I'll be hosting the new Kalkine Wellness Show. The half-hour show will cover topics from how wellness as a concept has become even more significant during COVID, to how becoming vegan may improve your health, and much more. We are excited to showcase our live streaming show to our audience of millions overseas and in Australia. Tune in to Kalkine TV and join me.
Welcome back, I'm Holly, your host live from Kalkine Studio, and you're watching the show The Market Movers. Let's zoom on through the energy sector now. Major energy players such as Woodside, Beach Energy and Oil Search are trading in the green after crude oil prices ticked up. Meanwhile, AGL Energy slid on confirming a demerger of their retailing business. The company has announced that it'll change its name to Accel Energy and demerge its retailing business AGL Australia into a separate entity in the fourth quarter of the financial year 2022. According to the company, the split will see Accel Energy focus solely on the baseload power producing and the redevelopment of its sites as low-carbon industrial energy hubs. In the commodity market, crude oil futures edged higher on Tuesday as hopes for demand recovery persisted and comments from OPEC's Secretary General overshadowed travel restrictions due to the new outbreaks. Meanwhile, the oil market is eyeing its next direction from the scheduled OPEC meeting this week. And on to our next segment in the show that everyone is waiting for. Let's have a look at some stocks under the spotlight. First up, consumer and business finance provider Thorn Group traded in the green despite warning of material operating loss. The group has cautioned that it would have a material operating loss in the 2022 financial year if disappointing trends from the first quarter trading persist. The group highlighted the business battles intensifying competition and COVID-19 with a significant investment in strategy. Thorn confirmed its net profit of $8.4 million and 1 cent dividend for the year ending March 31. There are audited results following the early release of the preliminary figures, and while it maintained its previously announced position of not providing profit guidance. Meanwhile, shares of fashion accessories retailer Lovisa rallied after Blundy's PLBY deal. Lovisa's major shareholder, Brett Blundy, BB Retail Capital, struck a deal to sell his lingerie chain Honey Birdette to the Nasdaq-listed PLBY for $333 million in cash and stock. On to the next news. Shares of Australian tech company Calix were up today after it announced it has been awarded the maximum $1 million in grant after the Australian government's Manufacturing Modernisation Fund. The fund grant is to develop and transform its biotech manufacturing capabilities at its Bacchus Marsh facility in Victoria. On that note, it is time for another short break, but stay with us and I'll be back with more trending updates on the market.
Tune in to get the latest information.
Whether it's about market movements or the currency graph,
Sectoral coverage or industry news.
we cover it all on our news segments.
Be on top of the latest news
With Kalkine TV. Welcome back. I'm your host Holly, live from Kalkine Studio, and you're watching The Market Movers. Before the break, we were discussing the stocks that are in the news today. And the last stock that I'd like to touch on is shares of Link Administration Holdings, who gained after the admin services provider announced the plans to retain a slightly smaller shareholding in the property settlements platform PEXA. Shares of PEXA, that is PEXA, are set to be listed on the ASX on the 1st of July. In an exchange filing, Link, the largest shareholder in PEXA, said it would hold 42.8% stake in the digital property settlement platform after the IPO. The company will also receive around $180 million in cash proceeds, which will be used to pay debts to make balance sheet stronger and more flexible. And next up, the last segment, let's have a look at the key market drivers this week. The latest conference board consumer conference data was closely watched by investors amid a spike in coronavirus cases across Asia and rising inflation concerns. with consumer confidence levels jumping to their highest in the 16 months of June. Consumers exhibited optimism over their own financial prospects and business conditions in the months ahead. It seems the strengthening labour market conditions amid economic reopening have successfully offset consumers' concerns over the inflationary pressures. Looking forward, it'll be interesting to see whether the short-term inflation expectations will dent consumer confidence, or the accelerated pace of vaccinations and improving labour market conditions will continue to bolster these sentiments. And meanwhile, the upcoming non-farm payroll report due on Friday is expected to provide further clarity on the state of the labour market, while paving the way for the central bank's policy stance. Next, in the commodity space, although OPEC has continued to keep a tight leash on output over recent months, the supply deficit continues to remain a cause for concern, especially for the oil market. Given the supply constraints, the chances are high that the cartel may open the spigots to fulfill rising demand. On that note, a smaller increase in production by OPEC is more likely to be bullish for oil prices. While we can't deny that rising cases of the Delta COVID variant can emerge as a major headwind against the oil demand. And now, before I take your leave, here is an important update on the end of the financial year. Today being the 30th of June, the last chance to make the most of using the instant asset write-off scheme for Australian businesses. The write-off is convenient for small and medium businesses to install a business expense and immediately get a tax deduction. The scheme was pumped up as a part of the coronavirus stimulus package last year, where it increased to $150,000 per asset. All assets must have been purchased before the 31st of December 2020, and although previous businesses have been able to annualize profit of $50 million to qualify, it is now available for businesses with up to $500 million. But today is the last day to take advantage of this Australian business tax break. So that is all for now. Stay tuned for more live market updates on Kalkine TV across economies, markets and sectors. Holly Shields signing off.